to win. And I noticed that the trades I entered, I thought were really good trades, but I wasn't giving them any time. I was like trying to capture the profit and messing around with my stops. I found it totally nerve-wracking, like at the end of the day, especially with the market whipping around, like the first week went really well and a lot of my trades jumped. And I just felt like, oh, this is fantastic. And then the second week, it was like, woo, slam. Um, and I took a lot of trades to the long side. I was trading kind of differently than I normally would, and I felt like I was trying to day trade. Like I didn't want to stay in too long, and I'm not real good temperament-wise with that. So I definitely felt differently about my trading when people are watching and when it's a competition. And I think a simulator account too. I got aggressive. Um, so I'm finding it difficult. And on last Friday, I just said, I really have to trade the way I know how to trade and try to stay in the trades longer and let them resolve a bit. Um, but the market's been really testy, I think.
Yeah,
So
it's been a difficult market for sure, but it always is, right? It's never easy, right?
no, no, not really. In hindsight, it looks easy, but while you're doing it, it's not easy. So, um,
And that
yeah,
that point you made, that there's 2 points you made, that trading in front of other people, right? It's one thing to sit at home and take your trades and do that. But as soon as you do it in front of people, it does change things, right? And I certainly experienced that when I started this service. It's one thing to take my own trades, then to go, okay, I'm going to publish them, and other folks will take them. It changes. It's a different dynamic. And then trading in sim, there is a sim has its place. It's a great place to go practice, but it really is hard to treat it like real money for most people, right? It feels like monopoly money, and if I lose it, it's no big deal, right? Except you're in a competition, right?
yeah, exactly. And I really felt like, well, am I playing to win? I mean, because I could get really aggressive, and just count on a few wild stocks to go up. And so I found myself doing that. It's like, well, I only have a month, and having a time constraint. I mean, this shouldn't matter. I mean, the trade should play out pretty well with a swing trade, but I started to get kind of greedy and I went kind of off the rails, is kind of how I put it. Like, what am I doing? It felt like two different approaches to me, because I wouldn't do that in my regular account. And I found like I was going in earlier than I would in my regular account, but I felt like I had to make a decision and move because I only have a month, you know?
Got to get some trades going, right?
Yeah, I got to get in there to see what's going to happen, So I tried the best I could with my usual chart approach, but I did try to slow it down. Some of my trades I'm taking on a 60-minute chart, and trying to hold to those stops earlier with such a whippy market is really hard. I felt like I was getting in and out of trades like I just at such a fast pace.
And I saw on the chart here, in what, 2 weeks of trading, right? You took 36 trades. That's probably more active than you were doing in your live account, right?
Right. Right. Yeah. I'm usually I'll take 2 trades a day, and when I started this, I was like taking 12. So I think I got a little carried away. It was like a shopping spree. And so I felt emotionally like all over the place that I'm not I tend to try to contain my trading knowing I do that. And I haven't been great at day trading or even earnings trades where you have to make that quick decision. And so I stay with swing trading.
I think
That's
that, so I'm going to ask you a question, and then I'm going to ask this of each of the competitors, right?
mhm.
Um, what's a, if you would say there's one or two key things you learned through the competition that you will apply to real trading, live account?
Yeah, I have to think about, my fear of missing out. And especially with big moves in the market, I've had a lot of that. And to really stick to my plan. Um, if I see a trade, I know it's got to play out. I know it's going to go up and pull back. Stick to the plan, like you always say. Uh, and I think in this competition, I didn't do that. I noticed my fear of missing out and wanting to win kind of overrode that. And I think that can sometimes leak, transfer into my real trading too. But this was magnified. This was like right in my face. Like, things I
So I,
have done in my
I
real
would,
account. Yeah.
and in some of your comments before I asked that question, you said what your comfort zone is for trading, right? And you got out of it because of the competition, right? And then you came back to it. I think that's important for traders to know. Here's where I'm comfortable and where I will follow the rules. And when you're breaking out of that envelope, that's a good learning, right?
Oh, very good. Very good. And then, like you said, when people are watching, it feels real different. It's like some nights I was like really elated, and other nights I felt like it was the walk of shame. It was it was a roller coaster, and then I realized in my real account too, I have to be careful of that. And I cannot control the market. I cannot be sitting in my real account hoping and thinking I have some kind of control. I have to stick to, I'm going to win some, I'm going to lose some, and stick to my plan.
Amen to that. Amen to that.
Yeah.
Yeah, trading is one of the, it's a strange, like other activities, you can control the outcome, but in trading, all you can do is follow your system, right? You can't control what the market's going to do. So good.
No. Yeah.
And for the folks listening in, feel free to type in questions for Grayson, Jack, or Shiv, or myself as we go along. Really, um, if you got questions for them. But thank you so much, Grayson. Thanks for playing, and thanks for kind of sharing your thoughts on this journey.
You're
Going to,
welcome.
yeah. All right, Shiv. You kind of heard what the questions are, so maybe what your
Yeah,
approach has been, key learnings you have, and what would you take out of this, into your live trading from having participated.
yeah, and I think I had listening to Grayson, I think I had a very similar experience in terms of the learnings, because I'm also a swing trader. I'm not a day trader. I have a full-time job, so I'm generally looking at couple of weeks timeline, and I'm looking to catch the up move in stocks. And usually I like to do is find strong stocks that they've experienced a correction, usually reversion to mean. So, and then they're poised to go back up. And so I'm looking to capture a week to 2 weeks maximum of upward momentum. And generally the big winners I've had, generally they just go straight up. And if there's more than 1 or 2 days, if there's one day of, if it starts to hesitate, and I look to see if there's near a top or something, and then I'll take partial profits. And then if it's 2 days, then I'm out. Usually it's I just don't have the patience. And the other thing is I usually can find a couple of, there's usually about a half dozen trade ideas every morning that I can find. And then I narrow those down I look at a couple of different factors and indicators, and then I look at the chart. And, I try to see and I have a very quick and dirty risk to reward generally, is I look to see what's the current price, what was the previous high, and is it is at about 20%, because I can do that calculation in my head. Is the so if it's but so yeah, so the sim thing was, that first week was quite a learning experience for me. So one of the things, so I just, I had, even early on in this, I had, like, I bought Coca-Cola shares or options, and I was up like $1,000 the first day. And then I was trying to take profits, and the sim account, of course, I struggled to get a fill, and then it didn't fill. And then the next day it tanked, and I basically broke even. I actually lost like 20 bucks, I think, on the trade. But then after that, I realized, okay, I'm going to start taking profit along the way. Like, screw this. I'm not really a day trader, but the timeline is much shorter. So I'm going to take profits as I go along. And so, and especially the other thing, and I had done this before in my regular accounts, which is to trade the indices. And I would take, but I would hang on to them overnight thinking, okay, maybe, and then what happens is often the indices will reverse the next morning. And so, and then, you try to get out and it's too late. So that was the other thing. I started playing the indices, and I realized, and this was a lesson I took from that, is that moving forward, when I play the indices, like either the QQQ, the NASDAQ, or the IWM, the Russell, or the SPY, moving forward, I'm going to exit the trade at the end of the day. No more, like, in that last half hour, I'm out. And so I did that a couple of times, and I made like $400 or $500 with the indices a couple of times, either up or down, and just doing the momentum. And so that was a good learning for me as well. And then also another learning was that, because the competition was till the end of the month, I was doing shorter options. And because normally I go out 60 days like you do. And so I started doing, I would take weeklies and whatever was available. And so I thought, I found that the weeklies actually shoot up much faster, and they're cheaper. So I think this is something I'm going to incorporate into my regular trading, is to start using more of the weeklies, because like I said, I'm generally out no more than 2 to 3 weeks. Like, I'm just looking for that quick uptick, and then I'm out. So that was another good lesson that I learned from this trading. And let's
Just
see.
on that point, the weeklies, like you said, for shorter term, they are cheaper. You're not paying for as much time. You got to be on top of the expirations, of course. And on the weeklies, you'll notice the IV sometimes is higher, so you got to be in the money to make those work, because the IV can crush on you.
Yes, yeah. And one of the things that has really helped me even before is when, I showed you the results of my personal accounts. And one of the things I started doing was I started going in and checking. I mean, I do work full time, but I when I have a minute, or I'm taking a coffee break or whatever, I'll go in and go through my accounts and see what the trades that I took that day especially are doing. And if a trade, like, if I have 4 or 5 indicators, Vantage Point, MACD, RSI, everything says it's going to go up, and it starts heading the wrong way, I'm out. Like, so, but and that's how you limit. I mean, for me, that's how I limit my losses, is but I have to go back and check every couple of hours, and to see if it's, like, initially when I started doing it, I would just say, well, the indicator said it's supposed to go up. Maybe I just need to be patient. And then I got burned a couple of times, and then I said, no, I'm not going to do this anymore. Because there's, like I said, I get trade candidates every morning, so I can better deploy my money elsewhere. So if it starts heading the wrong way, I'm out. And that's what I did with in this competition as well. So the time frame was a bit of an adjustment for me, as it was for Grayson and stuff. And then also the sim account, which responds to just the way the regular account does when I don't get a trade fill, even if I hurl obscenities at it. So You know, that's how it doesn't really make any difference. So you just have to kind of go with it. And I think the other thing too I've learned over the years is that um, you know, with options particularly, you pick a price that you're comfortable with and not chase too much. And the market, it's the option prices are going to fluctuate during the day, so you let it come to you. So if you're within a nickel of the current option price, most of the time, you know, if you just leave the order open, most of the time you'll get filled within a couple hours. Now, I mean, there's a chance you won't, but often I'll go up to a certain price and then I'm like, I'm not gonna overpay for this. So if it's going up, so then I just let let it fill by itself. If it
That's an
fills.
important point, and one that Mark and I talk about in the Advanced Traders Club with the earnings trades and with the day trade alerts. Is you got to do that, right? You cannot chase price and overpay for something, right? And if
Oh,
it,
it feels like somebody's like, you know, you 610 and then you go look, oh, 612 and a half, like, and then 615 and then it's 620, you know, like, oh, it's like the market is anticipating what you're doing. And you know, you're like 5 cents short every time. So you just can't get too wrapped up in that chase. And you just got to say, okay, it's going to come down that nickel and I'll get it. And if not, I'll buy something else tomorrow, whatever.
yeah, there you go. So that's just, that's being patient, being disciplined. And on a lower cost option, a $100 or $200 option, a nickel or a dime move that's 5 and 10%. That's a big deal.
Yes, yes, absolutely. Yeah. So you don't want to chase too much. So,
Yeah.
but
And on your index trading, I'm not sure if you were aware, but the options for like the SPY and the Qs, they trade 15 minutes after the close.
I didn't realize that. Okay. Well,
Yeah.
that's definitely good to know. And
Yeah.
I mean, I was usually closing within the last half hour, but and because often, so usually the other thing I've seen is that in the last hour, either the market will, like, if so, suppose the market is going down, and if then it starts to catch fire, then often in that last hour, it'll suddenly, you know, it's down 200 points, and that last hour it'll be down another 100 points or sometimes another 300 points. And so so I look in that last half hour to see what's going on with the market. Is it gaining momentum or is it losing momentum in whichever direction it's going? And then that's kind of then I can gauge whether to, you know, what to do with it. So
Yeah. Well, thanks, Shiv, for being part of the competition,
my
for being
pleasure.
engaged in it, and for joining us today and sharing your experience. It is awesome.
Thank you.
So let's go ahead. Jack, you're next on the list here. So you've heard the questions, and
Yeah. Hey, good morning, everyone. Yeah. Well, I would, let's see, to start out here, I pretty much agree with everything the other people have said here. It's funny when Shiv was talking about taking profits. Yeah, that's something. I'm kind of an impatient person, and I probably my biggest fault is taking profits too quickly. I often do it, and then I'm sorry after. But I think sometimes it works and sometimes it doesn't. But you know, I might have had a little bit of an advantage because I do day trade probably more than I swing trade. I don't know why, but I think it might have something to do with me being a little bit of an impatient person. I kind of like going to sleep at night, not having any positions open. I mean, it feels good to me. And the next day is a fresh day. If I had a bad day, it doesn't matter because I'm starting over again. And, that's kind of the attitude I have traded with. So this, this in this competition and being such short term, it has been kind of comfortable for me. But I will say, when I'm thinking of when I'm trading, whatever time frame it is, I'm thinking about all the things that I learned in the Master Trader course. I can't look at a chart, you know, without thinking Elliott wave, Dow theory, trending. Where's my risk? You know, how am I going to control the risk here? You know, these trading rules and trading management. You know, that's what I got from the Master Trader course, and it's the first thing I think about when I look at a chart. And I could be day trading or swing trading, whatever it is. I still see those same movements. The stocks, the charts look the same pretty much, you know, on any time scale to me. And so the you know, the only thing that I've done differently, and it's sort of neither here nor there, but to me, RSI, for an indicator, I use RSI, and I can't look at a chart without having my RSI on the bottom half of the chart, because it just gives me, I feel like I'm seeing more clearly what's going on. And I don't know what it is, but I know some people can just look at price action, but for me, I just love to see the RSI, and I think it gives me better indications for setting my stops, and it gives me better entries, and I think it gives me better exits. Sometimes I'll have a stop set and I'll get out before I hit the stop because I see the RSI has done something that's telling me it's time to go. And so that's pretty much and that's really the only indicator I use. I mean, I play around with other indicators, but you know, what I recommend to people is try a bunch of different indicators. And when you find one that sort of rings true, use it and get more and more familiar with it. And eventually, whatever that, you know, there's lots of great indicators. And you sort of just by using one over and over, the familiarity sort of just gets you a deeper and deeper feel for it. And that's the way, like when I'm trading, day trading, I'm using 1 minute charts, but I also have like my I use TOS to Thinkorswim, and so I'll have like usually have 4 charts open on the page, and the first one that is 1 minute, then I have 5 minute, then the third one is either usually 30 minute or 1 hour, and then the last one is day, and they all have RSI on them. And so like the way I'll look at a stock, and it might say on a 1 minute, it might look really interesting to me, and the RSI looks good and everything. But then I look at maybe the 5 minute or the 30 minute, and I realize that the move I was looking at might just be a very short term move, and it might not really be worth getting into it. And so in other words, I'm looking at different time frames, but I'm thinking, ideally, I'd like them all to be lining up. Like, you know, if I got a daily chart and I'm seeing an impending down move, and then I'm seeing the same kind of thing happening on a 5 minute and a 1 minute, I'm thinking, this is a pretty good setup here. And so, you know, then I'm likely to just give it a shot. But if you know, if you look at if you were following my trading history, I wasn't doing that. I was sort of just breaking even after a lot of trades. And on March 17th, I just was thinking, you know, let me, you know, take another look at this. And so what I did was, I have a lot of saved scans in Thinkorswim. You can, you know, when you do a scan, you can save it. And I probably have 50 saved scans, all different kinds. You know, you just come up with anything you can think of and you can scan for it. And so I started going through a few that, well, actually, I'm seeing, for example, when I'm looking at the big markets, like, you know, the S&P 500, I'm seeing what they call negative divergence, or bearish divergence, that's been happening on the daily chart since starting we had a pretty good rally in late summer that peaked around the beginning of September. And that was a high point for RSI as well. And if you look at RSI on a daily chart for starting then, every peak we've had since then, the RSI has been dropping. And it's not only been dropping, but you can actually draw a straight line on the peaks on the RSI chart starting in September, early September. And so what that's telling me is we're having nice rallies here, but the market is weakening in a very systematic, in a very steady fashion. And that's not good. I mean, if you're bullish, that is not a good scenario. And you can look back at previous downturns in the market, and that's always the case. And you see the same
I don't know
thing.
if you can. I don't know if you see I'm sharing my chart here, Jack. And I don't use RSI, I use the price oscillator, but it's showing the exact same thing that you were showing, which is even in an uptrend, right? We've got bearish divergence in the momentum, right?
Yeah, that's true. And that's why I said, the indicator you choose is not that important. It's just your ability to kind of look at it and see what it's telling you. And that is what I thought.
That comment, I've seen your charts before, right? And I think you have, you got RSI down here, right? And I know you're using Elliott wave and extensions retracements, but it's great to go experiment with indicators, but it's also a mistake to get too many on your chart and get confused, right?
Oh yeah, definitely. And I do that. The funny thing, I'm sure every software has it, but there's one button you can press on Thinkorswim called clear all drawings. I use that so frequently because I just create this mess of stuff that you can't see anything there.
Right. And for me, I think indicators help, but I want to see price action, right? I want to see it first and foremost.
Yeah, you've got to do that. That's why I like the way you use Ichimoku, because I don't want all those lines. They confuse me. And I know some people are probably great trading off those, but I want to see the cloud. And that's the way you use it, and I like that. So yeah, you need simplicity, because there's just too many things. If you have too many things going on, you can't really focus your decision making.
Right.
So to finish that story, I was actually so on the 17th of March, I scanned, and I just quickly looked at about maybe 100 charts on a short term. Like, I think I was looking at like a 5-minute chart, 10-day, or maybe it might be a little longer than that. But I started seeing I saw quite a few of the stocks had made had done a wave 3, a short-term wave 3 down, and looked like they had and had a wave 4 up that looked like it was turning around, like starting a wave 5. So I said, wait a minute, I'm gonna I see this, after I see it on 30 stocks out of 100 that I look at, I'm thinking, okay, I'm going to pick the best out of these. And I think wave 5 is starting on a short term. And that's what I did. And I bought puts on about 10 different stocks, maybe 10 or so different stocks. And next morning I was up like, I think $13,000 or something like that. And I waited another day because I thought we might get a good continuation, but we weren't getting continuation. So I just decided to take those profits, and that was the kind of thing that. And the other thing that you said, what did I get the most out of doing this? And I have to say, the thing that I got the most was, because I'm working with one screen here. It's a big 60-inch TV screen, but it's a little bit limiting in that I don't have 4 monitors open, and so I have to jump around in doing things and looking at things and so forth. And so the biggest thing that I got out of doing this is just being so familiar with your trading software that you can click quickly and you don't have to think about where this information is or how do I do this, or that kind of stuff. I've gotten normally when I'm just trading on my own here, I don't feel as much pressure in terms of time. But like, for example, when I got that idea that it was the perfect time to short a bunch of stocks, it was about I think it was like maybe 2 hours before, maybe it was probably like 2 p.m. and maybe even a little bit later than that. And I had already picked pretty much the stocks that I was interested in, but I hadn't chosen the contracts or evaluated the risk and that kind of stuff. So I was just like rushing as fast as I could, and my ability to like find stuff in my software became really important because I wanted to finish before 4 o'clock. So that was the biggest thing that I really got.
Well, good. And a couple points you made there, having at least 2 monitors is really helpful, for me, because then you can have a watch list or a scan going on one, link it to the other, and just click through your list and look at the charts, right? Without having to switch screens on a single monitor. So at least 2 is really helpful to do scanning. And then, your point, you said you looked at 100 charts, right? Which might sound overwhelming to some people, but if you're really familiar with your indicator, your trading system, and you've simplified it, looking at 100 charts, you can do that in less than an hour, right? And
definitely.
That's going to set you up for the next, several days, right? So, and then, just being super fluid with your trading platform. So you spend your time in analysis, not in navigation. That's really helpful.
Yeah. And I'm really not familiar with too many other programs, but Thinkorswim can be kind of intimidating. I mean, it's great that they have so many things incorporated into it, but it is just, there's a lot of stuff, and there's a lot of stuff you don't have to deal with if you don't really need to, and it's hard to kind of navigate through the whole thing.
Yeah, and the way you get familiar with it is you play with it, right? You just spend time trying things and learning, right, on your own.
Yes, definitely.
And
yeah.
it takes time. All these trading platforms are sophisticated software, but once you get to that point where you don't even have to think about it, you can just whatever it is you want to do, you can instinctively go do it. Then again, makes your time spent in front of the screen way more efficient, because now you're analyzing rather than navigating.
Oh, exactly. There's too many more important things to be thinking about than which button do I press.
Yeah. Well, great. Well, thank you, Jack, for being part of it. And I'm showing the scorecard here, and you guys, as Jack told his story, right? It's been remarkable, because for almost 2 weeks you were flat, right? You were trading pretty actively, but breaking even, and then you switched approaches, and it was not luck, because you just explained the thought process and the analysis, and that so far has paid off, right? And,
yeah, well, I made a kind of a joke in there, because when I'm day trading, I'm it's a little different from your approach. It's not quite the same, and I basically switched back to a kind of a short-term version of what you do, and bam, next day I'm like up thousands of dollars. So it's kind of funny.
I'll take that compliment.
Well, you deserve it. You deserve it, man.
All right. Well, again, thanks, Jack, for participating, and for sharing your thoughts this morning.
You're welcome.
So we got about 22 people who are watching. Do you guys have any questions for Grayson, Shib, or Jack, or myself? Be happy to answer any that you have here. And if not, we'll go ahead and wrap it up. And then, we got this week and half of next week, and then we will see who the winner is. Give it just a minute there. while we're doing that, let's look at what's going on intraday in the market here. Boy, the S&P is just going straight up. Russell's finding some support, and NASDAQ, it's on fire, 2%. Wow. Kind of want to see that on a daily chart. But this is still, you know, low, lower, high, low, lower, high, low. It's really kind of consolidating. It hasn't broken above the 50-day moving average yet. Charles says a lot of work, but can you tell the max drawdown at the end? All the competitors are doing this, you know, in their sim accounts, and so at the end we'll look at the statement of the winner and, you know, confirm that that's what they did. In terms of drawdown, so this you know, when you run the report at the end, it should give us the drawdown. You know, lots of people ask about drawdown. You know, for me, that's more of an investment metric. You know, and in my teaching, I focus on win ratio, payout ratio. Those are the important statistics, but we should be able to see the drawdown.
And Dean, just to jump in real quick. So I followed Dean's, initially I was using the calculator, and then I just like, whatever. So I just took trades that were, I was doing options, and I took trades that were around, that would cost me around $2,000. And so, and then I put a stop at about 50%, which is $1,000, which would be the, you know, the whatever the 2%
Right.
of the account. And I never took, I don't think I ever took more than 5 trades a day. So just to give you an idea. So I don't think I ever committed more than, there was never more than a possibility of $5,000 drawdown on any given day. Just for your information. And I also wanted to echo what Jack had said about the indicators. Like, so I use MACD and RSI on mine, and you know, I've been using them for a long time, and it doesn't really matter. There's so many indicators out there. Just pick 1 or 2 and become familiar with them, and go back. And I had mentioned this when I had talked during the trading room, but you know, go back and look. So what does the indicator look like when there was a high? What does it look like when there was a low in the past? So you can historically look and see what the indicator was showing, and then you can start to see the patterns as to what is likely to occur when the indicator shows a particular pattern. So,
and there's another point on that thread that I think Jack would agree with. I think you and I, Shiv, talked about it. Eva and I talk about it, right? Whatever indicator or analysis we're bringing to a chart, one of the things we train our eye to look for is whether the symbol under study follows that indicator well. Because you'll pull up a chart and you know, hey man, I like RSI, and you'll pull up a chart and you go, this thing has no respect for RSI, right? The RSI signals are meaningless, so I'm not going to play with this chart because it's not in my comfort zone, doing things that I understand.
Yeah, and my screening process, I go through like several indicators and different things, but then in the end, I look at the chart and say, does this look something I'm comfortable with buying or not? And so, you know, that's the thing. And then another thing I want to say is, you know, just to be very frank, I'm much more comfortable going bullish than I am bearish. I am really still not at the stage where I feel that I have taken some bearish trades, but I don't really feel very comfortable about still. And I need to, that's something I need to work on. But, you know, there's always something to work on. So, you know, it's a never ending process.
Absolutely. That's one of the cool things about trading is you're never done learning, right? And improving.
Yes.
Jack, it sounded like you had a comment on the
Sorry,
indicator.
Jack, I didn't mean to interrupt you.
Oh, no problem. You said exactly what I think. It's just that that's one of the things you'll see is RSI. It frequently will just look like a crazy zigzagging line that really doesn't tell you anything. And those are the times you just say, forget about it. I'm not going to go there. And, you know, you do the same thing, Dean, all the time. When you see a chart that is not telling you a story, there's no reason, you know, we've got thousands of these to choose from. So we look for these situations where everything seems to be presenting itself very clearly. And, you know, it gives you one step ahead of the other folks that are just like going based on a news story, or, you know, a lot of people are trading off of kind of things that might or might not have anything to do. And you know, and to a certain extent, that's the same thing, but you just have to get every little advantage you can. So a nice
Absolutely.
organized chart is something that I really look for, and they're out, and there's plenty of them out there. That's the nice thing.
And I call it target fixation, because I'll you know, some people seem to approach trading with, you know, it was the FANGs for a while: Facebook, Apple, Netflix, Google, right? It's like, okay, how am I going to trade Apple? And I just think that's the wrong question. You know, the question is Apple tradable? And if not, move on. Like I said, there's thousands, right? And the other thing, I know Shiv and I have talked about it, and I don't know if you do this, Jack. I think Grayson does, but when I pull up a symbol and I like the pattern, and then, you know, it's like, wow, this is a good chart, and the indicators are lining up, and this thing behaves well, right? I do glance at the backstory. I kind of want to know, what's this company do? What sector is it in? Does this just make sense, or is there some dissonance, right, with it? You know, I make all my decisions and analysis on the chart, but you know, I'm just trying to think off the cuff, right? You know, like right now, you might go find a setup on a gold stock, right? In fact, I'm watching AUI really close, and a customer sent me a note over the weekend, say, hey, what do you think of Newmont, right? So I'm looking at AUI, Yamana Gold. We've traded this before. It's a great trading stock, right? And it actually looks like, you know, there's a pretty good case for a long 3, 4, 5 starting, but it's a gold mining stock, right? So if I'm going to trade this, I want to know what gold's doing, right? And I'll go look at the gold ETF. And I go, yeah, it's kind of doing the same thing, but it's also got some real resistance. So before I trade Yamana Gold, I'm going to make sure that gold as well is in an uptrend. And that's just, again, I call it the backstory.
Yeah, and I think that's like the sundial and being a marijuana trade. So we're looking at the, you know, quite a few in the most recent election, quite a few states additionally have voted to legalize marijuana. And then the feds have said that they would decriminalize it and stuff. So clearly there's, at long term, there is going to be, a lot of these are going to have some good success. But you know, so, you know, if some of these individual stocks set up, then, you know, then they may be worth taking. So, yeah. And we looked at MJ as well, the ETF. Yeah. And one of the things too, I like, if you're not sure about a stock, then sometimes, you know, I've traded the ETF because then you don't have to worry about earnings, and it may not have the same momentum as individual stocks, but you can usually get something, you know, at least you'll be able to participate in that. And so I've recently I've started looking more and more at ETFs to trade. So
yeah, I just throw an idea in there too. Because I do the same thing, and I think day trading, it becomes even more like, I don't really care what most of these stocks that I've traded. I mean, some of them I know what they are just because they're familiar names, but plenty of them I don't know what they are. And I didn't really care because I was planning to stay, you know, it was going to be a very short-term trade. And I'm just looking at some short-term price action and thinking, what's going to happen? Am I going to make a few dollars off of this or not? And but one thing I do, and it's on Thinkorswim, there's a button on the right-hand side that's labeled N, and it stands for news. And you click that, and it shows you like the 20 or so most recent news articles that have had that symbol in them. And so I will do that before I jump into a trade. I'll look to see if there's any, you know, class action and some, you know, whatever might have happened. So that's about as far as I go with, you know, but I agree, if particularly if I'm going into a longer term trade, I want to, the longer term it is, the more I want to know something about the stock. But I still don't really, generally base my, I might drop an idea because of something, but a lot of times I don't.
That's what I'm looking for, basically a reason that would keep me out. Is there something scary coming up, right? That you just, it was publicly available and you ignored it and then you got hammered. You don't want that to happen.
Yeah. Yeah, right.
And I agree with you on day trading. It's less important because, you're going to be out of the thing. You just, but, I use a filter for liquidity. I want a certain volume level. And then if it's options, a certain open interest. And I assume you apply that as well, Jack.
Oh, definitely. Yeah. All my
Yes.
scans have that.
Yeah, I think at Vantage Point I look for at least 1 million in the volume.
Yeah, 1 million per day average, right?
Yes.
Then
It's liquid.
low liquidity can be a problem, right? You can usually get in. Getting out can be a challenge at a good price.
Some of those
Plus,
obscure mining stocks. Yeah.
Well, plus it affects the spread. When you get it, if you're looking for a tight spread that you can set a send a market order on,
Yeah.
it really helps to have good volume.
Yeah, I wanted to add one thing too. Like I check the backstory. Sometimes I'll listen to what other people think, but in the end, I found that I can get, I don't trust myself. And so mostly I just go with the chart, like Dean has said, look at the action on the chart. And then if I see it, and maybe 7 out of 10 people might not see it, I'll still take the trade if I see it, because I've got to start trusting what I see. And then over time, I learn, how I interpret the information on the chart. So, sometimes you can listen to, different analysts and read articles, and they'll be all over the place. And I've missed out on some great trades that I saw. I saw the chart. It made sense to me. And one thing I've learned big time is that I cannot trade like another person. Like I just don't see the same thing.
Yeah, at the end of the day, it's your money and you have to be comfortable with the way. And I agree also that, the backstory to me is, as Dean said, just some basic, I just want to know what's going on. Why is this going up or down or whatever? But the chart, the analysis of the chart is what's going to tell me whether I'm going to take the trade or not. So.
Yeah, and for me, like I said, the backstory is primarily to disqualify it, not to qualify it.
Yes, exactly. Yeah, because you don't want, as you said, you don't want some event that's public knowledge to disrupt the trade, when you could have just Googled and found out, oh, they're having this happen.
Right.
Yeah,
Right.
then there's still times where it catches you off guard.
Oh, well,
right?
there's
They have a
always
stock
that.
offering that happened to me on Road. I couldn't believe it. I was like, what? The very next day, a stock offering.
Or we've had it happen in the swing trading, for Follow Me Trades, where we got a great setup to take a trade, and then some influential analyst comes out with an opposite report, right?
Oh gosh.
You just can't. That's why we use risk control. You can't guard against it, right? You just can't. Part of the risk. That's why we use risk control. All right. Hey, Mike says this has been a good meeting, good stuff. Yeah. I've really enjoyed, and I really appreciate Shiv, Grace, and Jack, and Jennifer and Pavlos, who also are participating, couldn't be here at this session. But thanks for taking your time and being here today. I think we're going to go ahead and wrap it up, unless if you guys have any final closing thoughts you'd like to share with the folks listening in, or if any of the attendees have any other questions or comments.
No, just thanks and good luck to everybody on the next week and a half. I hope everyone does well.
Yeah, be fun to have a really tight finish, huh? Come down to the last trade.
I'm prepared.
Yeah.
I'm mentally kind of expecting that, but we'll see.
Yeah.
Yeah, it's not over until it's over.
Exactly.
All right. Well, we will go ahead and wrap up. Okay, everybody. Thanks. Trade safe. Keep the winners big, losers small. And at the end of the month, we'll do a wrap up and crown the winner. We'll see you guys then. Bye bye.